Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to today's video. As always, we're going to recap what happened within the trading session today and talk about the next day analysis. So with that said, let's go ahead and start with the daily time frame, and we're going to look at Bollingers here. And usually I would be looking at the moving averages. However, the 20-day moving average is the exact same thing as the middle Bollinger, exact same settings. So we're going to start with that. Now, with today's session, we had a high of the 765.22 and a low of the 762.08. Now, the 20-day moving average, the 20-month, was at the 763.55, which really gave us the upper range of that 765.55 and the lower range of the 761.55. Well, that coincides very much with the price action we saw today. We saw the 765 22, so only 33 cents off that upper level. And we saw the 762.08, which was, roughly 50 cents off the lower level. So what that means is that today was a 20-day moving average retest, or a 20-month retest. And this is something we've been talking about for quite a while now, going back to the daily time frame, and now we will turn on the moving averages, is that kind of just stepping back a few weeks, we had the upper Bollinger move. From that upper Bollinger move, we went to the 5-day moving average, the 5 MA. Next, we went to the 10 MA, and from there, we went to the 20 MA. Okay, so that's kind of exactly standard price action that we're looking for, and it's been a while since we've seen standard price action in such a way. Now, one thing I do want to pull up is our drawing. So it might look like a mess for a moment. I do apologize. But as you can see, our price stayed very, very much so within the selling channel. Okay, which means that it is respecting the selling channel. And by it, I mean the algorithm. And that's, somewhat predictable currently. Okay, we rejected the consolidation channel here, last week. Technically, last Friday we pulled back up to it, very, very slightly. The bottom of that support range ended up turning into a rejection range. We saw that rejection range twice now. And from there, we're starting to head downward, retest some of these lower levels. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. So where do we go from here? Tomorrow's data really isn't anything notable. There's no significant data. So we have to go based off of our structures and moving averages. So with the current structure we have going, you can see that we have a bit of a head and shoulders going on here. And with today's price action, we actually bounced off the bottom support almost to the penny. I mean, it was only, 9 cents off, but big deal, right? That doesn't matter too much. It means that the market is rejecting or did reject that support today. But each time we reject a support or test a support, generally it weakens one side of either the buyers or the sellers. In this case, first time we tested it, head up again, rejected the bottom of the consolidation channel twice, and so we're seeing our buyers tapering out. Okay, hit the bottom of this support channel again, and so far, obviously we don't have a crystal ball, we can't see into the future just yet, but very likely this is going to end up causing this channel to break. Okay, or not the channel, but this support range to break. Now, what's below the support range? we have the next support, which is at the 758.11. And I didn't expect this level to get pushed today, but I did, I do have expectations for this level to be pushed over the next few sessions. And from the 758.11 support, that's kind of when the waterfall happens, right? We have this fairly massive range between the 758 and the 748.80. Basically a $9 range, almost $10 range. So that's going to be a pretty large selling day unless they try to break this up into multiple different selling days, which they absolutely have the availability to do so. Again, we are holding pretty strong within the selling channel currently. And so as long as we keep drifting downward, then that's fulfilling the the necessities of what the algorithm's trying to accomplish here, which is to hold the selling channel and continue selling downward. Now, going back to the daily time frame, this is very important to start focusing on, is that now that we did have the 20 mile retest, this is the most neutral point of the market. Okay, the 20 mile is the most neutral point of the market, and I'm going to turn on the drawings and it's going to look horrible for a second, but I need you to focus on these big arrows here. Is that from the 20 mile, we generally have movements, causing a massive upside or a massive downside because the market wants to break away from that neutral range. So what are we kind of in? We're within this selling channel. We're seeing it drift downward. We're seeing the ADL pull downward. So it's very likely we're going to see this downside, um, you know, the downside taken compared to the upside. Now, what's sitting on our downside? It's the 50 mile. Okay, this is a very, very key level. We've been talking about this, and it's very likely that the market is going to try to fill this fair value gap. And we're going to go back to the drawings again, just because I do need to show this. And I will get the drawings cleaned up a little bit for next video so that there's just not so much going on. But this fair value gap here needs to get filled if we're going to continue to the downside. So it's very likely we're going to start seeing that fair value gap, and I'm going to have to pull this out a little bit, but pull us down continuously within this selling channel, pull us underneath that 50-day moving average, start retesting some of these lower supports, and once we hit the bottom of wherever that bottom is, which, hint hint, it's kind of going to be where this lower Bollinger is, very likely, then that's when we could potentially start seeing some major upside again. Now, I'm not going to completely, say that the upside is impossible at this point. Again, when we do hit the 20 mile, that gives us a lot of support, or it can turn into a major resistance. We do have the 50 mile underneath us. So if the market's, in the position to say, okay, we really don't want to continue dropping down and pushing down here, then we will see the algorithm kick in, retest the 5-day moving average, which we did kind of test that level a little bit today. Not really. We were in the lower bounds of that level. Again, the bounds are about that $2 range above and below the actual moving averages themselves. So the 5 mile is currently at the 765.66. It will be pulling down very, very likely, probably still to that 750 or that 765, maybe the higher 764, but it won't be as high in the 765 at least. So if we do see it pull down, which, obviously it will based on tomorrow's open, I do have the expectation it'll probably be around that 764.80 to about that 765.20. Okay, which means that it's very well within the bounds of being tested, either tomorrow or the next day. And that would make a lot of sense because generally what I look for with moving averages is that it's something that I kind of term and coined the moving average weave, where between each major moving average, we generally see a 5 mile retest. Okay, so basically from the upper Bollinger, 5 mile, 10 mile, 5 mile, 20 mile, very likely 5 mile again. From that 5 mile retest, we can start to see a major breakdown because again, look at where the 50-day moving average is at. It's at that 752.11. Where was that next support? It was at the 748.80, if I remember correctly. Let's go ahead and turn these off and look at that for a second. So besides the 758.11, the one underneath that is that's 748.80. So this one coincides very, very greatly with where the 50-day moving average is at. Yes, the 50-day is at the 751. It will be continuously drifting upward towards that 752. However, this is still very much a level we need to be looking out for, especially because, you know, this is kind of within that gap of where the market previously traded, and it kind of just pushed up without any form of support. The real support in this entire structure is really at that 737.68. We did have a couple support hits within this range, but nothing, very significant at all. So I do expect the market to kind of drift downward, start taking some of those ranges. Now, again, the major rally was caused, primarily due to the fact that everybody thinks that QE is starting when that's not really the case just yet. Now, there was some talk today about, them putting $1 trillion into, the Treasury account to be able to buy long-term bonds, but they're not printing any new money. And these long-term bonds that they are buying are mostly unmarketable bonds. Now, I don't want to say they're bonds that can't be sold. Any bond can be sold, but these are bonds that are basically not worth a lot of money right now. So as much as QE is going on, which it really isn't, this is just to me a big show. And very likely that's why we're starting to see the market react the way it is, because this isn't QE behavior. Okay, if we were having QE, we'd see a major continued push um, to the upside. This is not indicative of QE whatsoever. And we also see the US Treasury yields responding to that as well. We're seeing them continue to drift higher. Now, today they were down a little bit lower, but that's because oil was up higher. Those do have an inverse correlation to each other. Don't think too much about that. But anyway, for tomorrow's trading session, I do expect either to retest the 5 month, which we're very, very close to the top of the selling channel. So our downward expansion should really start kicking in fairly soon, unless we're seeing the channel expanding kind of like we talked about in Sunday's video, where we see this channel taking these supports instead, and then we're going to start seeing it moving kind of sideways rather than just straight down. However, based off of the current supports that we are targeting, we are kind of on a major downward trajectory. Now, to close this video out, I do want to, kind of make another mention of is that the ADL has been significantly dropping. Okay, I mean, very, very, very significantly dropping, and that means there's money exiting the system. Okay, or exiting the ETF. ETF in this case is SPY, which is a big deal. So this is telling us quite a bit. Now, the volume here, we see the buying side has dropped off significantly. The sellers are picking up quite a bit. Today was a little bit of a weaker day, but we did not have any data. Again, for tomorrow, we don't really have any significant data. On Wednesday, that's really when we have the big days worth of data. So I do think that the market closing around that 5 mile range tomorrow would be, or make a lot of sense essentially. Um, Generally, we see the market try to position around that 5-day moving average when there's major data sets coming the next day. That way, it can really determine that if we're going to start pushing back upward, it has the support already built to do so. If we're going to start dumping and pushing down, well, it already retested that level and it's ready to do that. So 5 mile retest is really what I'm looking for tomorrow. So on open, make sure you check where the 5 mile is at. I would definitely set a level of the upper bounds and lower bounds of the 5 mile and heavily expect to close very, very close to where that level is, basically at. So with that said, I'm going to end the video here. Thank you all for watching. I appreciate each and every one of you. I hope your trading day is very, very safe tomorrow, and take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.